All right, morning, guys. It's official good morning or good afternoon, wherever you are. Um, just going to do a review of the week. Try to include as much as I think would be necessary for anyone that was trading last week. Anything we missed, this is hindsight review. Anything we missed, and that's it. If time allows, there were some questions in. If somebody else wants to share a chart and do some stuff, all good with me. Yeah. So I haven't been doing a lot of Zooms because the audience, you don't really ask a lot of questions. You really want to just sit and listen to me talk. As fun as that is, I'd prefer discussion. I'd prefer to have a conversation. Right? I'm not a guru, I'm not anything beyond a regular guy just who trades. That's it. So I want you to interact with me on that level. Ask questions and reach out. Right? This was last week. So coming into the week, I had low expectations for Monday to Wednesday. This was the bulk of the volatility that I was expecting. And I wanted to see NAS drop. So coming into the week, I wanted to see NAS sell off. I'm gonna get to a chart. We'll talk about some of the areas I want to see sell off from. But this chart or this calendar is not enough to justify why I want the short. So I kind of pointed to why I wanted shorts and how I missed really good longs on Thursday because my bias was overwhelmingly bearish. So see me feed. Somebody's going to ask, I'm going to tell you again, this is where I look for interest rate data. This is where I get information on when the next FOMC meeting is coming in, what are the expectations coming into FOMC, and some of the data information. So this chart, bar chart here, tells us rate probabilities and the expectation. So right now we could see that the bulk of market participants, banks in particular, are expecting a 50 or 5 to 5.25 basis points data for the next interest rate FOMC release. That's it. If you look up here where it says probabilities, this tells you if the expectation is that they're going to ease up on the rate decision. So not decrease, well, not increase, but more decrease. No change means it's going to stay as whatever the last decision was. And the rate hikes means it's going to increase again. So most expectation is that it's going to increase. If it's going to increase, it generally means that there's going to be some amount of strength coming in for the dollar. So for the last couple of weeks, you might remember me making a post that I want to see about 2 weeks day 12 bullishness. This is where I got all the information, or this is what led me to wanting all that, or wanting to see that. So yeah, coming into the week with a bullish DXY bias, I want to sell NAS and gold if it allows it. That's about it. Now, a lot of things going on this chart, not necessarily important. So let's go to a daily chart. So let's assume that we're planning for this unbelievable messy week. We would have the information right here. So for a second, let's just pretend that we didn't have Monday's data. Make it as big as possible. How could we use this data to plan for the coming week, and in particular identify what are some prices that we could reasonably expect price to trade to, be drawn to? I have a bearish bias, so where's an ideal area that I could possibly see a short. We already have the news data, so we know what days of the week. Anywhere between Monday and Tuesday, Monday and Wednesday, we could get the high of the forming. Classic ICT. For me, this up candle right here is very important for many reasons. One of the reasons is that this started a new delivery. So once this candle printed, a new delivery started here, right? If this is the start of the new delivery, it means that price is the starting price of the new delivery, right? So let's think about algorithmic trading for a moment. If this is the start of the new delivery, this is basically like ground zero or day zero for a new delivery. So when this candle closes and the markets are delivering afterwards, this price and where we are from it will dictate a lot about overbought or oversold. Smiling as I struggle to find words to explain this. But nonetheless, I'm going to put a red line here so that we can understand that this candle's opening price starts the delivery. On that day, a new delivery starts. What's the delivery or what's the drop? We don't know, and we don't care. All we want to know is this day is the start of the delivery. Now we could use previous information if you're trading here or any time in here to identify what you want to see. Since we're all the way over here and we're expecting a new week, we're just referencing the start of the delivery because we haven't really left here. No, we're just sitting here. So important prices are going to be, I'm not using a red line for this. Let's go that high, that low. So everything I'm going to do is going to be built around a liquidity draw at one of these points. If price had left this range, then there's really no reason to reference them. But because we're still here and the chances of the next day, Monday, opening within this range is very likely, I'm going to look for what has happened since right here. Where did it happen? And what can I expect for the coming week? All right. So let's pretend, right? Pretend for a moment that this candle encompasses an entire consolidation range. This single candle. What that would mean is this is a consolidation, and since consolidations are holding patterns, we'd have buy side liquidity above here and sell side liquidity below here. If I'm bullish, I want to see price trade through that high, specifically that high. If I'm bearish, I want to see price trade through that low, specifically that low. If the market fails to leave this range, then ICT month-one says consolidated market conditions, you pair that with that price, equilibrium, right? So I want to see where we open on Monday, and since this is here, I'm gonna extend it out so we could reference that price later. This is equilibrium of the current range. So automatically, it doesn't matter what my bias is. I have an idea of where I should look for potential setups. If I want to be a buyer, I want to look at some liquidity pool below this level. If I want to be a seller, I'm going to look at some liquidity pool above that, because we sell into buy side liquidity and we buy from sell side liquidity. Daily highs and daily lows are the easiest representations of liquidity pools. Failure swings in particular helps to refine where you look and what you look for, so you don't just pick any random daily high or daily low. So you walk through this price action. I don't know if you can see this. I'll pull it to the left a little bit. what you'll see is this day here is the last time we took a daily high, which means any daily highs that come after this day is likely to hold liquidity based on a rule that I coin as the last stop on rule, right? If this has liquidity and this takes it, then that's it. There's no liquidity on this daily high. The next daily high, if it fails to take this, will hold liquidity. Simple. So if you think about it like that, keep that right there. This is the last real high that was rated. This day holds no regard for me because there's no liquidity. This is the day that took liquidity. Similarly, this low, oh, I can't pull it because I can't see the other day. This low will hold liquidity. When we get to another daily chart, daily candle, I can pull it across. It doesn't allow me to pull it halfway. So that's important price levels. I don't want to see a sell setup form when Monday, or if Monday does not take this high. Anywhere between here and Monday's high would be ideal. If it goes back above here, no problem. Right? I just want Monday's high to be formed and not take this so I can find out where is a logical area that buy side is resting. I don't need anything to form here. I can already see that. So if I get a short, first objective is here. First objective is to expand below 50% back into discount. So short setups or short ideas in here, run discount. Once it's running discount, best case scenario. If I get 50 points from a drop here, then that's a good trade. And that could be it for me. So we're going into the market on Monday with that expectation. I don't care what price does until it gets here, unless it's lower time frame. I don't care what price does until it gets here, unless it's lower time frame. Here's Monday. I'm gonna take this red line off. Here's Monday, right? Monday creates the high. I'm going into the week now, and I'm very happy that the liquidity pool is now resting above Monday's high. And now I can pull this over, and my sell side liquidity is resting there. What happens if it expands through that? I wait for a change in the state of delivery. What happens if it expands through that? TP, best case scenario, and that's a beautiful trade. For actual setup ideas, we're going to go to the lower time frame in a bit. Somebody asking if I'll upload this to YouTube. Yeah. No worries. If you can't stick around, no problem. No problem. So look at how it played out. The short happened. So somewhere inside here on a lower time frame is going to be a bearish order block. Or maybe the bearish order block is all the way over here. Doesn't matter. A change in the state of delivery is going to happen here after we take liquidity, and then the setup is going to form to run down here. That's all. That's your plan going to on Monday once this candle closes, and you can see this information. That's the plan. You get a big short all the way down here. So Tuesday morning, you'll remember in the group, I pointed to or mentioned that Nice is going to give a 100-point short. I didn't expect it to happen like this day to be huge. I mean, these days are just disgusting. Really good shorts, then come back. Really good shorts, and come back. Right. So let's go to the hourly chart and look at how the setup played out with that logic. So, I look at 4 a.m. as the start of the daily delivery, which means my week on Monday will start at 4 a.m. Before that, irrelevant to me. This is the old daily high that we used on the daily chart frame where liquidity was resting. When you drop to a hourly chart now, you realize that that daily high is actually big wick. Based on the time it was formed, it's very likely to be news related. So disregard this wick and pretend it wasn't there, right? because it's a news wick. If this wick wasn't there and we have this information here, where would you logically look for liquidity? You do the same thing by looking at this as the highest high that was in the market. So you could go to the left a little bit. This is the highest high in the market that took liquidity. This is the last place that we housed liquidity before it was taken. So based on OB model, that would mean this up candle that was formed on Tuesday at 4 a.m. with random time, that is my order block. Cool. So if that's my order block, I can take this line, not be a stubborn willy, and move it to this candle's opening price, because this is now my order block. Right? Let's see what's going on in the chat. Cool. Same overnight session. Interesting stuff. So what's the most important thing here, that this is your order block. So if you started here on Monday and you did your refinements, this is what you would see. All of these highs would now be failure swings, or any highs from this candle's high lower that failed to take out this high is holding liquidity. Right? All the lower highs coming down after this candle, Tuesday 4 a.m., is a failure swing to the downside, it's holding liquidity. So if you think about this very popular structure, lower highs, lower lows, lower highs, lower lows, this is bearish, right? So we learned in the beginning. Then we learned from ICT that this is all liquidity building. Same thing here. All these lower highs, disregarding that big wick, these are all always in liquidity. But this is the order block. If this is the order block, I'm not expecting them to raid the order block high. I'm expecting them to raid whatever lower highs are inside here into the order block and then tank. The size of the order block will help you to understand if you look at the opening price 50% or you look at structure inside it. You just need to remember and stick to the rule that you're only holding liquidity. We're not trading a raise. We're not selling here just because it's an up candle, because there are many up candles here. We pick this one because it's the one that closed above here. Lower highs inside here, liquidity pool. Being a stickler for precision might not always be a good thing to do. If any big wicks are formed by news, just get rid of them and look at the structure for what it is. So these could be all you need. All of these lower highs right here, bam, bam, and maybe this. Cool. But if it didn't close above it and just wicked above it and reverse from there, rejection blocks. That's it. So we've now refined our plan. We came into the week with the idea that we wanted to go short somewhere up here. We refined it to this. Now we have an order block. We have sell-side liquidity. Lots and lots of things that we could look at right here. This is the previous week's data. So if you want to be a stickler for precision, you could always look at this being the lowest low since last week. These are the lows that were rated. This is a big wick, so you could disregard it and look at this one. Don't call it mentorship, but the guys in the group, yeah, not everything in the group I spoke about, but overnight session is not anything that we're afraid to talk about. So yeah, this is the low in the market. This is the range that we got from a daily chart. We could refine this for precision purposes. And look at this as the range. Now, while this might not be the most precise way to look at it, it definitely keeps you from making Emotionally driven decisions. But in order to do that, this has to be a rule for you. It can't be something that you do whenever it's convenient. It has to be something mechanical. This is what we do, and that's it. Full stop. All right. So here's where that's the range. So now if you're looking for 50%, I don't remember what this red line was for. I think it was for the weekly open. We could change this right here and say, if I get any kind of shorts above here and it starts to fall, this is an ideal first objective. Once we get here and we close, retracements are permitted because range expansions are generally price trading below a low or a significant quote unquote support level. Then it retraces, then we expand and make new lows. Cool. The short setup formed Tuesday morning. We'll probably look at this on an M5 in a bit. Then it starts to trade low. Your best case scenario was all the way down here. This is enough. It might not have gotten exactly where you wanted it to, but this is enough. All of these levels can, from the daily chart, can now be refined if you'd like to. For example, the day that we use to frame the start of this delivery, since we use 4 a.m., you could always take this blue line and re-anchor it wherever 4 a.m. is. So this is the 4 a.m. candle. That's not precision driven. That opening price, short setup, low hanging objectives at equilibrium. Here's your first target. This is Thursday delivery, and this is what caught me off guard. Didn't expect them to come back because we already took buy side, traded to the order block, expanded and made new lows, retraced. So now I'm just thinking new lows. While it did create new lows here, I didn't see a need for this to happen again. And I got quite a lot of stop outs, break evens, trying to short in here this day. A lot of persons got longs. Really, really happy that they got long, but for me, this order flow is not bullish, and we're not in an area like this where I'm expecting retracements. So this cooked me. Now we got the shorts going down again. I got one short in here and pretty much left the day early, but yeah, let's go to M5 and look at the delivery here. A couple of intricacies. Oh, let me point out again that this low was our daily buy side liquidity, sell side liquidity pool. We got there. So one mechanical setup for the week would have been short setups inside here on Tuesday, targeting this, stop loss, take profit for the guys who love to hold it all the way just so it looks good on screenshot. All right, Monday. Here's Monday. Take a sip of my coffee. Time range as well. Time range, no. Now you can rewatch the call from Monday. You'll see basically this. That's a good joke. Anesthetic trading, that's a very good joke. That kind of humor. Okay, so here's Monday, all right? Now, I mentioned a lot of things subtly or quite subtly in conversation. My aim is not to gatekeep information. My aim is not to act like I know it all. My aim is simply to share that whatever you see me doing is just a product of my rules. There's no secret stuff. It's just a product of my rules. I share my rules in plain sight. Plain sight, I share my rules. But persons just don't look. They don't look at what I'm showing, right? And I can be so subtle that I'm making a joke right now and only some persons are going to get it. Example, Sean just dropped the art right there. Sean gets the joke. What I want to point out by saying that is I shared a post about something that I accept because I believe that algorithmic trading is the way. And it was quite a subtle post, no big deal. It said, once you believe that there's an algorithm driving these markets, you have to accept that the algorithm will create ranges. Then it will use those ranges as reference points. That's the way it is. In order for it to be efficient, it must find a way, or it must have a way that's programmed into it where it could create ranges, identify the ranges, then reference specific data points inside those ranges. Okay. Thank you, Matthew. There was no algorithm, there would be no statistical edge. We just flip a coin and manage risk. Next thing I shared is that I don't trade before 8 o'clock. Two simple factors that somehow keeps going over persons' heads. Why? You're holding on to your cherished beliefs. You're holding on to something that you're trying to understand. Maybe that's not working. And I don't know why. The stubbornness that we all have with trading is ruining us. That's a word. If we're wrong, you change the rules of the strategy that you use. Literally, just decide on your own that I'm using this setup, it's not working. I'm going to change the rules and form fit it so it works in hindsight. And then forward test that form fitted logic. Madness. Absolute madness. This right here, 2 lines on a chart, is showing you way more information than anything else. Anything else. Right? So, if we know for a fact that 4 a.m. starts a delivery, fact, no arguing, no debating, fact, 4 a.m. starts a delivery, and we know that the next session starts right here, oh, close enough to right here, ballparking, right? This automatically creates a range. Let that cook while I sip some coffee. Again, not trying to be a know-it-all, not trying to spill any beans. This right here is the only trading session apart from New York session that should be important to anybody. So now the questions are popping up. What is this? So what Matthew said in the chat earlier. While this is not to the pick or to the minute precise, this is enough to get you very, very close to how to frame where liquidity is resting in the markets every single day. And that's what I'm telling you. I'm going to leave that for you to go backtest and study. This range right here is everywhere on the internet, and it's called the overnight session. You don't care about London, don't care about Asian, just care about the overnight session, pre-market session, and then the session 9:30 and afterwards. PM session, of course, if you know you want to get fatigued. How does this help you? Every day, this tells you what high and what low to look for. If I'm bullish on a daily basis and I don't feel like looking at the higher time frame, I'm looking at the highs that we're forming inside here. If I'm bearish, I'm going to go short. I'm looking at the lows formed inside here. Every day, that's enough for a short. Okay? No gatekeeping info. No, I don't know, whatever you want to call it. This is me sharing something that I've used quietly. Of course, nothing is 100% correct, and you're going to take losses, but humor me and backtest. Backtest how many times you can get a run after 8 o'clock that takes the low or the high of this range. And if you want to add a little oomph to your backtesting, create a checklist. Number one, what's the daily order flow? Once you know the daily order flow, let's say it's bullish. Just assume, right? Don't do this in hindsight, or don't do it like how we normally do stuff in hindsight. Just create a checklist for backtesting. Don't go look how many times it worked. Create a checklist for your backtesting. What's the daily order flow? It's bearish. Okay, cool. If I'm marking overnight session and I assume that there's a short, where did the short form? Did it form above overnight session or below overnight session? Just humor me and check that. 2 rules. Daily order flow, where did the entry form? I guarantee you, you will see a model just like that. 2 rules. What's the daily order flow? Where did the entry form? And if you create a 3rd rule for your own backtesting that says, if we're bearish on the daily, did an entry or an order block form above overnight session high? Just check that. The DOL lecture helps you to frame the daily direction. This helps you to find your intraday swings, and that's all you need for a model. So, in person had spoken about daily reviews. The daily reviews I'm going to share are going to be, once we identify this and nothing else, was it very easy to frame where a setup formed? And that's going to be it. So, for the sake of humoring, let's say that that's our range. Ignore this red line. Somebody's going to. What's that line for? Go. We traded right here on a wick above this high. If this is the pool of liquidity and we wicked above it, the rules state that we use the highest body inside the liquidity pool. And that price becomes your rejection block. Simple. This is now your rejection block. Extend that out in time. Why? Just because it looks pretty. It's rejecting that random level. Why did it reject here? I don't know, maybe find something else and align it with maybe midnight open. No sensitivity at midnight open. Interesting. But yeah, beautiful stuff. Now, once the liquidity is taken, you need a CSD. You need a change in the state of delivery. What do you mean? The up candles, after liquidity is taken, you're waiting for up candles low to be taken. Simple. Up candles low is taken right here. You're selling retracements. There's my stop above the order block, and that's it. There's my target. I'm looking for a run below here. If this low is already taken, how do I frame a target? Go to a higher time frame, look for a pool of liquidity, manage the risk and submit. Beautiful delivery. You might see this short in my channel. Right? So look at Tuesday. And you look at the time when I sent the message on Tuesday about the short. And you'll see. So there's a range. Somewhere in here, I mentioned there's going to be a 100-point short. Why 100 point? Because if you get any kind of short above this high, which is at 13,198, and it goes and takes this low, right? The likelihood of it expanding is great, especially since the order flow is bearish. So 98 and whatever this was, 36, that's about 60 something. Expansion, 100 points is easy here. So that's what I shared on Tuesday. Here's that short. Earlier in the chat, somebody said you could use this as Asian range. Yes, you can. You could use this as the same way you use any other ranges. Just stick it to that time. You could see where retracements are coming after other things. Remember this level right here. I take out these lines. Like the zoom model. Remember that price, eh? That price right there. Let's go to Tuesday. No, it's Wednesday. On Wednesday, we have same rules, 4 a.m., 8 a.m. There's your range. Have that level in mind. There's that one. Thursday, this profile is very similar to Thursday, which kind of hurts me again in hindsight because I missed it. But watch that structure. Watch that structure. Watch this structure. So you remember how ICT talked about 5 points is all you need? Think about this. If this liquidity pool is all you're targeting, and you blend that with premium and discount and equilibrium of that range and whatever, and the order flow is with you, and you're bullish, for example, if you get a trade anywhere, any of these down candles, and you're holding for this, it's 5 points. If you get any trade inside here, that's 5 points. Friday is the last one. There we go. Then I'm jiggy. Range. Here's your short. I didn't get this long. I saw it in hindsight because I wanted to see more bearish downside. So I shorted this. A good friend of mine got our 50 points. Then you run. in hindsight, I'm pretty sure everyone can see the long, but I was busy. I was busy being bearish, so I didn't see it until after I had a one-on-one call. Just in case you can't see it, liquidity pool. Down candle that close below. This high, not taken. Not even going to try to refine stops or anything. That's it. Absolutely beautiful. So for reviews, maybe about 15 minutes or maybe less, maybe 10. Next week, at the end of about 5 o'clock every day, I'm gonna do a call and a review the daily profile as it relates to this range and how the setup was formed. Okay. If you see it, then I'm positive you're going to know what I'm going to say on the video. If you don't see it, then I guess I'll help to refine your vision. But that's the review. That's me preparing you for what I'm going to share next week. And while I take a sip of my coffee, open the floor for some questions, then we can wrap up. Someone saying something?
Okay, sorry, Kish, I was trying to ask you, after that low was taken, how come you put your stop loss directly on the order block and not on the low of the new low created? Yes, that place you have your red box. Yes, sir.
So you're saying put my stop here versus putting my stop here. Why?
Yes, there. Why didn't you put your stop there?
Just my personal rules. Doesn't really matter. If this is a trade by itself, this is mechanical. No need to watch, no need to do anything. That's a trade. Just like that.
Okay.
But yeah, good question. The focus or I guess the main thing to decide when you're placing your stop is don't just think about my stop should be this amount of points or whatever. Just look at where is the trade invalidated. Once my stop is going somewhere where the trade is invalidated, I'm fine. We already CSD here. Change in the state of delivery. So down candles highs were taken. Even if this retraced deep right here, I'd feel comfortable that we're not going to dig into this down candle again. Since there's a FEG here, I'd expect this FEG to act as support. This is a big candle. The range of that candle from the high is 34 to 30 points. Big candles, I don't extend my range with my stuff like that. I try to get in close to 50% of the body. When I'm right, beautiful. When I'm wrong, stop loss.
Yes.
Hey.
Hey, can you explain CSD versus order blocks?
Sure. So a CSD is the change in the state of delivery, which means wherever a delivery ends and price is going to change its state, we expect a CSD to happen. So if I grab my annotate function, if the market's on buy side and we get to the objective, right? Very important definitions. If it's on buy side and it gets to the objective, I expect it to change its state of delivery right here and then share it to sell side. Wherever sell side is. Sell side could be short-term sell side and then it changes again and that's it. If we're changing the state of delivery inside a liquidity pool, it's very likely that an order block is going to form. Very likely. We don't move the markets. We don't, I don't know. overthink. If this, then that. The whole point of rules is to say, because I can't push the market down right here, I want clear indications of when it gets here, it's likely to go low. That's a CSD. I want it to print an up candle, preferably close inside the liquidity, then take that up candle's low. Then I'm interested in a short like that, wherever the liquidity is.
So you mean CST is the order block?
No, CSD is simply a change. So when price is moving up, the delivery is on buy side.
Mhm.
So think about it like that. If it's going up, the delivery is on buy side. It doesn't mean it's bullish. We could care less about bullish or bearishness. If it's going up, we're thinking the delivery is on buy side. What we try to do is identify where is the draw. The buy side delivery that's happening right now, where is it drawing to? If it's being drawn to here, let me take off some of these lines. Let's say the buy side delivery is being drawn to here and price trades up and it retraces because it hasn't gotten to its objective. This up candle is not an order block, but this down move is a change in the state of delivery. When it changes again here, that's what you want to buy to get to the objective. Okay.
Thank you so much.
Cool. I just saw Jeremy. In a Zoom model, you use the open price of the lower down candle when it's here. Ooh. Sexy. Indeed.
So Kish,
Hey,
you using that logic you had for the last example, is that the reason why you chose that candle on the daily to be the change, the CSD?
correct.
Okay.
So the important thing about rules is, as logical traders, right? Not traders that just copy stuff. We need to be open-minded. If the rule is linked to price delivery, it should work on any time frame. Any time frame, right? So humor me for a second. Just for a second. I mean, go to the daily chart. All right, just humor me for a second, all right? The year started here. That's the start of the delivery, right? This might not be very clear to a lot of persons, but well, not clear right now. But I want you to just humor me for a second. At the start of the year, the very first Zoom call we did, we talked about, oh, this is a consolidation, and we're looking at 50% and all that good stuff. Beautiful. All right. The market trades down into the discount end of the range that was created. The consolidation range is this low, that high. What I just showed you with overnight session is not a form-fitted 5-minute fractal. It's a delivery fractal that happens on all time frames. What does that mean? If you view this as your overnight session, big wick, disregard it. So the low is right here. Right? Just humor me for a second. If this is our range, you could even disregard the big wick as well when you move into that, just to keep it mechanical. Pull this over so you can see. If you view this as your overnight session on a daily chart, and you get a change in the state of delivery here, why here? Because the liquidity was swept and we didn't close below it. So rejection blocks. That means we look at the lowest bodies in the liquidity pool. And that's it. If that's the lowest bodies, it really doesn't matter if you use this one or that one, because none of them close low. This is my rejection block coming into 2023. What do I want to see here? No order block, since it's a rejection block. It doesn't really matter if it's an order block. But what you want to see that change in the state of delivery. So you want to see down candle days, their highs being taken. Since this is equilibrium, I don't know if this is going to retrace and then go lower and then sweep all that. But it's fair to say that from a high probability standpoint, if I go long here, put my stop below the order block, and I target equilibrium, that's a trade. If I have reason to believe that this guy is very bullish, that's a trade. If we get here and we're closing above here and I'm thinking higher prices, that's a trade. So what I just showed you is not a 5-minute fractal. It's a delivery fractal that works on all time frame. I don't trade H4 because I don't understand H4. I understand the delivery, but I don't understand some rules about H4. But we could do the same thing. Just find any range here. Let me use this with hindsight. That's the range. Change the state of delivery. There's a run. Now notice how on H4, it's not as beautiful as I would like. And I get these a lot on H4, so I stay away from H4. All right? I'm going to show you a range now, just to entertain a little bit of madness. This run here is inefficient, full stop. It's inefficient because when this candle closes and this opens, this range right here, I'll probably answer a couple more questions and then we wrap up the call. They don't want it to be this long. Here, this is a range, but it's not a high to low range. It's an inefficient range that needs a down candle. So listen closely to what I'm saying here. This range needs a down candle. This is a down candle. Did it fill in all this range? No, which means the delivery on sell side is not complete. This candle right here closes. Now all of this is filled in. So we have down candle bodies right through these two red lines. First one stops here, right? This right here, this is a range, and this right here is the start of a new delivery. That's all I'll say.
Happy holiday.
Happy holidays, right? But yeah.
So,
Let's take some more questions.
How do
one
you
last, yeah.
characterize new delivery? How do you know that it's a new delivery versus just being part of the algo?
Beautiful, beautiful, lovely question. Let me answer that with a visual. Remember when we said that this was, let's assume that this is the draw of a buy side. If price is trading to here, the delivery is not completed until the objective is met, right? That's not hard to accept. If this is the target, until the target is met, the delivery is not complete. Which means if we retrace right here, I'm thinking that. If we retrace, I'm thinking that still. Okay? This completes the delivery. When the delivery ends right here, a new delivery starts. What's that new delivery going to be? I don't know. It could be a change in the state of delivery that creates an up candle and sends this guy towards sell side, wherever it's resting. It could be a consolidation at the high. Then we take sell side and we run. The buy side delivery is still in play, but the objective is now somewhere else, higher. I don't know, wherever. So let's play devil's advocate, right? If this is the start of the new delivery, and we've gotten price trading below the range right here, up candles lows being taken. This was the range high. This is a stop point. This up candles low is taken right here. So once the Once this candle closes, it's doing two things. It's filling in this and it's changing the state of delivery. This candle here will be important. Full stop. This is going to be the candle that pushes price lower. So when we retrace inside it, here on this candle, we're looking for, since the state of delivery is now on sell side, where was sell side before this here? Before this, where was sell side? This low. Bam, bam, bam. This low. Not this low, because it's up liquidity here. This low. Bam. That down candle's low. Bam, bam. Right here. This low right here is the last sell side liquidity pool that's above here. When we get here, you wait. You have to wait. You have to wait to see what's happening. Delivery state changes. Liquidity pool, down candle, change in the state of delivery. When the state of delivery changes here, look back. Where is the buy side liquidity? Here, because this candle is the last time we took buy side since the start of the delivery. So all the lower highs since the start of the delivery that we're not taking will pose liquidity. Why that happened? Why not that happened?
Kish,
Hey.
so you're saying that once there's a change in the state of delivery, so let's say here on the down close candle, the change in the state of delivery happened on the buy side. So it's going to hunt buy stops.
Right, it's gonna hunt buy side liquidity.
Got it. And on the same fractal that you have, if there is no candle which closes, that becomes a rejection protocol?
Yes, rejection block. So think about it like this. This is the rule I use, right? And a person will argue and say that's not what ICT said. But yeah. This is my rule for rejection blocks. If we have a liquidity pool and price takes the liquidity pool and the down candle does not close below the liquidity pool, or sell side liquidity pool in this case, I look for the lowest bodies inside the liquidity pool. If these were the liquidity pools and they were taking, the lowest bodies inside them would be this one. But this close below, so that is good.
Could you, if you don't mind, could you show an annotation of that rejection block protocol?
Monday M5.
Okay.
Yeah, that's Monday M5. Just backtest it with that definition. But yeah, any more questions before we wrap up? Okay, that's a no.
Yes, I had one quick one.
What's
Just
up?
wanted to make sure we are talking New York time, right? The UTC -5 is throwing me off.
-5. Use -5. Don't argue.
Well, New York is on -4 right now,
That's right.
and you're talking use UTC -5.
That's right.
Oh boy! So that
Don't make it a oh boy. Don't take my word for it. Never take anything I say blindly.
Okay.
The guys in the group did the same thing at the start when I was like, all right, guys, it's daylight savings. You have to switch to -5. You know, there was a big conversation about -4 because ICT said -4. Right? No beef, no arguing, no anything. My simple statement was, don't take my word for it. Just go check. You've already seen what sensitivity for 4 a.m. You already seen sensitivity for the times that we trade. Backtest them at -4, -5 since the start of daylight savings. See for yourself. If it doesn't convince
Okay.
you, yeah, stick to it.
Sounds good.
Indeed, indeed.
A B C D E O G.
It's a beautiful Saturday, guys. It's a beautiful Saturday. So no more questions with this type of strat. Have you tried on Forex, specifically EU? Huh, tough question. I wonder if it works. Check. If you're in the Telegram, just check. Feel free to share your findings and see for yourself.
Kish, this is going on your YouTube?
I thought it was intended to be a short video. It's kind of long. I don't like long videos. Maybe. Who knows?
Now you're exposing the madness. You're exposing the madness. Good stuff. Good stuff.
No. Overnight session was never mine. Remember, I didn't create it.
No. I'm saying that's good though, because they get to learn.
That's the point. That's the point.
Why is this guy doing like this now? When is the next mentorship opening?
I can't. Just simply, I can't. It's a lot to manage. A couple of guys had said that once they got good, they would help me, but everyone is focused on themselves, which is perfectly fine. So that's why the only persons I accepted early this year were persons who were already gone through basics. You can't reasonably expect me to give all of my time, guys. Come on, be realistic. Be realistic.
Cap. Cap. I could help.
It's open. If you want to help, then we could take more persons. We could start a new group with the persons. That's it. Understood.
Let's spread the message.
You think we gonna I will.
Is entirely on Siri.
Now since I'm your salesperson, I think I deserve at least 1% commission. I was joking.
Listen, right? If whatever persons you do, let's talk about it off the here. It's not a sales pitch, right? It's not maybe it's a sales pitch. But yeah, hopefully that helped. And again, don't take my word for it, guys. Never take anything I say. I'm not the ghost in the machine, the author of anything. I'm not. I'm literally not. That's it.
Twin.
That's it. But yeah. My birthday week ends today. Thanks for everybody who celebrated with me, in particular the guys in my group. Lovely presentation. But yeah, Thursday weekend, and we'll talk in the group. Namaste.
Big up the 50-year-old lady.
Shout out to Mert.